Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 425 on May the 1st, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on NuScale Power Corporation, Poet Technologies, First Majestic Silver, and Riot Platforms, and we discuss 4 new trades on FuelCell Energy, SoundHound AI, Rigetti Computing, and Gamestop Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on today's show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the market's pushed higher this week with the S&P 500 index closing on a new weekly high and the Dow Jones finishing extremely high, albeit not quite reaching a new weekly high. The Dow Jones Industrial Average finished the week 268 points higher, closing at 49,499 points. The S&P 500 index climbed 65 points higher, ending the week at 7,230 points. And now it's time for the topic of the week. The topic of the week is understanding your technology. The reason I say your technologies is because it's actually a very custom mix of tools. We all have different computers, different brokerage accounts, different charting software, and an entire mix of different types of technology that we use in analyzing and executing trades. Now, I don't know your complete setup and your brokerage that you use for executing trades, but what they'll have is its own tools that they provide you. Make sure you take the time to learn those tools that you have access to. You might find that there are things that would make finding new trades or even executing trades easier and more efficient than your current process. I experienced something like that this week, and that's why it's on my mind. Make sure you understand the tools that you have access to so that you're not doing things the hard way. That's it. It's a simple message, but one that's worth remembering from time to time. Technology is changing so quickly these days, and if you're doing things the same way that you did them 5 years ago, you probably need a reboot or refresh of your knowledge of the tools to which you have access. All right, so that's it for the topic of the week. Let's get into the mixed, somewhat lower results of the review of last week's trade. So let's dive into that. We'll start off with our covered call on NuScale Power Corporation, symbol S as in Sierra, M as in Mike, R as in Romeo. At the time, the stock was trading for $11.96 per share. I looked at buying stock and selling the May 12 call at $1.31, hoping for a return of 11.29% in 3 weeks. Well, shares of NuScale jumped $2.46, ending the week at $14.42 per share. The call option we sold gained $1.40, leaving us with a net profit of $1.06 if we were to close the trade out immediately. Now, that's not bad for 1 week. Of course, with the stock above $12 per share, we're all set to lock in another 60 cents of profit in 2 weeks if the stock remains so strong prior to expiration. That being said, there's truly no reason to exit at this point. I will lean more towards not making an adjustment, but I definitely want to keep close track of the stock price over the next couple weeks. This trade is working out, so no need to close it out early or make an adjustment. Next, we have our cash secured put. We looked at Poet Technologies, symbol P as in Papa, O as in Oscar, E as in Echo, T as in Tango. At the time, the stock was trading for $15.09 per share. I looked at selling the May 15 put at $2.10, hoping for a return of 14% in 3 weeks. Well, shares of Poet fell $7.78 per share. This one really hurt, ending the week at $7.31 per share. The put option that we sold is deep in the money at this point. This is a significant amount of loss. You certainly don't manage these trades on a weekly basis, so if you're doing any of the cash secured puts on your own, make sure that you're tracking these trades because they can lose money, obviously, and they can lose a bit more money than what we normally have at risk on the spreads that we choose. But let's continue. Now, there isn't a good way to mitigate the loss at this point, but we can certainly contain it. By this point, you will likely have already been assigned on the stock that if you held onto this trade. That would lead to a loss of $7.69 on the stock. But remember, we collected $2.10 for selling the put. So your loss would actually just be $5.59. Now that's a tough loss, but it's less of a loss than if we'd simply bought the stock at the start of the trade. So this was a bad trade outright given the loss, right? So this is also why I prefer cash secured puts against companies with smaller stock prices. So if you ever wonder why I'm choosing some of these smaller names, this is exactly why. If the stock crashes, the loss is limited by the value of 100 shares of stock. And so the lower the actual strike price of the put that we sell, the less risk that we have on. Because if it goes against us, we have to buy the stock at the strike price. So that's it for that trade. Let's move on. Our credit spread from last week was on first Majestic Silver, symbol A as in alpha, G as in golf. At the time, the stock was trading for $20.57 per share. I looked at selling the May 20 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of First Majestic Silver lost 72 cents, ending the week at $19.85 per share. The out-of-the-money put spread that we sold is now in the money, and that means we are lining up for another loss on this trade too right now. Now, the good thing is that our maximum loss on this trade is 34 cents. We could sell a higher strike call spread against this trade to lower our overall risk exposure. Right now, those spreads are only going to net us like 6 or 8 cents. So that's not enough to excite me to make an adjustment. So I would lean more towards waiting a few days before deciding exactly how we're going to adjust this trade or whether we're going to adjust it at all. I'm happy to turn it into an iron condor, but I'd like to collect more than 8 cents to make it happen. And if I wanted to close off the risk, I would not simply buy the spread back at market value. Instead, I would sell the 20 and a half call spread to create a short box and lock in a mathematical loss. So choose the route that makes the most financial sense, which means do the math before you make any adjustments on this trade. But you can also give it a little room to breathe and see if this stock does decide to head a little bit higher again, back to previous levels, which would put this trade out of the money and in the profit once again. So that's it. 2 weeks until expiration on this one as well. Keep an eye on it. And our final trade from last week is a debit spread on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $18.58 per share. I looked at buying the May 18 half call spread for 31 cents. That could give us a maximum gain of 19 cents, or that's a 61.29% return in 3 weeks. Well, shares of Riot lost 8 cents, ending the week at $18.50 per share. The in-the-money call spread is still in the money, and the stock price is still above the break-even price, so we're still in a profitable range for this trade. So no adjustments are needed on this one at all just yet. Of course, with expiration 2 weeks away, we want to stay on top of this stock price as well as all of our other trades, just to see what opportunities or reasons to make adjustments pop up. So that's it for the review of last week's trades. We are 2 weeks away from May expiration on May the 15th. This is our last show using this expiration date for new trades. So let's go ahead and get it going. We're going to start off with our covered call. I'm looking at FuelCell Energy, symbol F as in Foxtrot, C as in Charlie, E as in Echo, L as in Lima. Stock ended the week at $13.27 per share. I'm looking at buying that stock and selling the May 14 call at 90 cents, hoping for a return of 12.28% in 2 weeks. Now you enter this trade by buying stock for $13.27 and selling the May 14 call at 90 cents. This trade makes the most money if stock prices finish above $14 per share. The break-even price on this trade is $12.37 per share, In real terms, the stock purchase will require $1,327, and you'll collect $90 for selling the option. Next, we have a cash secured put on SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in uniform, N as in November. The stock ended the week at $9.56 per share. I'm looking at selling the May 9.5 put at $1.04, hoping for a return of 10.95% in 2 weeks. Now you enter this trade by selling the May 9.5 put at $1.04. This trade makes the most money if stock prices finish above $9.50 per share. The break-even price on this trade is $8.46 per share. In real terms, you'll collect $104 for selling the put option, and you'll have $950 locked up just in case you need to buy the stock. Next is our credit spread. We're looking at Rigetti Computing, symbol R as in Romeo, G as in Golf, T as in Tango, I as in India. Stock ended the week at $17.52 per share. I'm looking at selling the May 17 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the May 17 half put at $1.36 and concurrently buying the May 17 put for $1.19. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $17.50 per share. The break-even price on this trade is $17.33 per share. In real terms, you'll receive $17 per spread that you sell and have $33 at risk. And our final trade on today's show is going to be a debit spread on Gamestop Corporation, symbol G as in Golf, M as in Mike, E as in Echo. The stock ended the week at $26.52 per share. I'm looking at buying the May 26 half call spread for 28 cents. That could give us a maximum gain of 22 cents, or that would be a 78.57% return in 2 weeks. Now you enter this trade by buying the May 26 call for $1.50 and concurrently selling the May 26 half call at $1.22. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $26.50 per share. The break-even price on this trade is $26.28 per share. In real terms, you'll pay $28 to enter the spread, and your maximum gain is $22 per spread. So that's it for tonight's show. Thank you guys so much for listening. Hey, I hope you have a fantastic weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.